Oh, yeah. You guys can hear everything. Hey, sorry guys and gals. I am was sorting through some issues with the audio. Microsoft keeps updating Windows, and every time it does, it's breaking my my mixer even. Sorry, also losing my voice. But I will be on in just a moment. We'll take a look at the charts as Jerome Powell speaks. I was going to actually have him in the background, but like everything is broken after this update, so give me just a moment here and I will be on. Okay, so we're gonna get this rolling in just a minute here. Bitcoin testing some overhead resistance of the range above, at least the wick low here. And we're going to jump in and take a look at that. You're not going to be able to hear it. Well, actually, let's see. Let's go over here and get J Powell up. And yeah.
Nick Timmeros of the Wall Street Journal. Chair Powell, markets widely believe the median FOMC participants' inflation forecast from June for the fourth quarter of this year will be too high, given autos and shelter, and that by September that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, you know, how much of this and how much of that. You know, we'll be looking at everything. And, you know, of course, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data, we'll be looking at the labor market data very closely, of course, and making an overall judgment.
Here on FOMC
it's the
day.
Totality of the data, I think, but with a particular focus on making progress on inflation.
This particular month.
If I could follow up, last month you said there were benefits to moderating the pace of increases.
I'm not going to actually listen to all of this, but we can flip back and forth. Let's go ahead and jump in. Excuse me. I'm losing my voice. I apologize. You're going to have to bear with me here today. But we are starting a little rocky today, as I had some more setup issues, as Microsoft Windows likes to break your entire setup when it doesn't update. And when I went to sit down, none of my audio worked. So microphone wasn't working, sound output wasn't working, headphones weren't working, so I had to redo my entire mixer setup here so that I could actually get this live in a decent amount of time. And we are going to take a look at Bitcoin as Jerome Powell talks today. And let's get an early look here at, or an early look. An early look would have been before he started talking about it, but a little bit of an early preview of what to expect, you know, going forward in the coming hours. If Bitcoin does regain this low side structure at around 29.4 to 5, I had mentioned that a daily a daily closure above 29.6 is what the bulls need right now. That'd be above the 2 wick lows here of the range, that 29.5 support, daily support structure as well. And that would give it an opportunity to come up and test around the low side structure here at 29,800. So that's going to be the big test, is testing the actual closing low side structure here, and then we'll kind of go from there. So let me take a look and see. I did manage to get some of my Stream Deck stuff working while being very, very angry at the rest of the setup. So I can actually see you here. Hello, Roka. Hello, Cheryl. I can see there's others here, but they have not started to chat just yet. On the YouTube side of things. So I do have you guys over there in the other chat. Hello to you guys as well. So yeah, got YouTube chats going. Do have some viewers in here. We got Jay Powell in the background.
Headline's going to go in the future.
He's saying things
and
that I don't
core
really care
inflation
about
is still
right
pretty
now, because the charts are what matter. And of course, while he's speaking, there's typically volatility. We usually see, you know, I mean, this was just so you know, this was the last time he spoke, and this was the 30th of June. So you could see intraday, not a lot that really matters, but at the end of the day, we can figure out direction based on some of the other indications on closes, especially for the daily on either a reversal setup or continuation to the downside will probably become a little bit clearer, especially today into tomorrow. And by Friday, I think we'll have an answer. But when looking at that daily, keep an eye on that 29.6. That's the lower first. That's what we need to watch for. So when we do flip to the lower term time frames, we've got this is the 4-hour bands represented as levels off to the side here. When looking at the daily, you can see that the basis band is right at that 29 400 area. It's deeper 300 400 area for the 4-hour basis band, and the upper first is pretty much in line in line with the daily lows. It's just below them at 29,700 for the 4-hour, and the lower first on the daily here is below that. So, that is to say that there is a cluster of band resistance or volatility resistance above, along with the technical resistance or horizontal resistance. So, again, I apologize for my voice today. It's not been the greatest. Yesterday was a pain when I was trying to, in the butt, when I was trying to record Bitcoin in 60 seconds because I just couldn't hold my voice together. And so I do apologize again for that. 15 minutes looking a little like it wants to keep trying up here. There is expansion into the overhead resistance, but because it is expansion into the overhead resistance, if it does not pass it and reclaim it on a close, I'd be looking for this to come back down and maybe even run the other way. For those that don't know, they did raise rates by 25 basis points again. So we are at 5.5 from 5.25. That was an expected hike. So that's not really anything new. And we're not seeing, there was no surprises for the markets. So if we do jump over into traditional market land here, NASDAQ was pulling back. It was already pulling back last week. Dow was still marching on, and Dow did hit our upside targets. It did hit the 35,631 in today's candle so far. So if it does push on through this area, I would expect it to, run the highs, to be quite honest. It's not far from there. The daily, as it compares to the weekly as well, if it can push up a little bit further above the upper second standard deviation on the daily, which is at 35,840, that would keep it not only above the upper second standard deviation on the weekly, but it would be hitting aggressive expansion on the daily and on the weekly. If it can close like this by Friday, we'll see. We'll see what today holds. It's, it could just hit this resistance and reject. This is a high from August of 21, and I would expect it to run the highs though if it closes up here, and possibly higher. We do have a pretty low volatility read on the weekly here. Let's see here. Let's go to BBWP. Yeah, we have liftoff on the weekly while it's in an upside move. So, even if it got volatile and pulled back today, the weekly says this is more likely to continue to the upside than downside, or it's more likely to keep continuing to the upside, even if we do see some downside, is what I meant. it could also set up a range where between the lower second and upper second is kind of the range that it plays in, because it is, it was pretty much sideways price action after the reversal off of this downtrend. So it is trying to create its a decent uptrending structure. We do have an uptrend right now, so we have our uptrend here. So this is good. Even if it pulled back, you want to see it hold the basis on the weekly and then continue up. So, and that would be around 33,764 for traditional markets. I looked over at chat, and I'll talk to you about Bitcoin stuff in a second, but already priced in. I mean, yeah, I mean, if it's expected, it's not. I don't like the word already priced in. I don't like that term. I don't like how people use it. And often you're going to hear a lot of macro guys use it. It's all just priced in. Like, no, that's like the TV economist way of putting things. Look, if it's expected that rates are going to remain high, and I've talked about this at length when discussing bonds, and the bond market is, and the way that banks have to hedge and stuff like that. Like, the longer that they can keep rates on the highs, especially when they want to transition to a CBDC-based system, they need to fund Fed now. You need to be able to hedge the risk on the other side. So keeping the Fed funds rate higher, does keep the bond market higher. So yields are higher. That does mean that when you take on more risk on the books, you can secure it against, you have a higher yielding bond to secure against. So banks are buying more bonds. Thus, it was pushing yield down. And then they, if they can hike again, bond market responds by either staying on the highs or pushing higher. And that will give them runway. I had mentioned this the last time. They need runway to fund the Fed Now system. In order to do that, you're going to need yield on Treasury notes to, hang on the highs or maybe even push a little higher. And that's actually, I'm not worried about NASDAQ too much. We can always come back to that as Jay Powell wraps his stuff up. But we can go to bond market here and take a look around for just a moment. We can see that 1 month T-bills are going to be giving you, let's go to yield. It's going to be the same. They don't separate here. It's 5.36. It's not, from the weekly perspective, 5.37 is the pivot. From the monthly perspective, its juice is running out. Could I have one more pop up? Absolutely, but I think it's going to stay kind of steady on the highs. Let's look at the daily. Yeah, so a little bit of a spike up and then sell off. So, I do think that it's possible it could go back and hit the highs on the 1 month, 3 month for yield. But one of the bigger things is you're going to see, you're seeing the buying. That's all across the top of the candles here. This is buying, right? Now this is yield getting pushed back down because buying that Treasury note that's going to yield a little bit higher than 1 month, 3 month is going to be more beneficial. And then of course the 2-year, 10-year, you got your 5 years. As rates stay on the highs, the bond market will respond. Yeah, I mean, 2-year, 10. You can just look across the bonds. It's a general. You don't need to be specific at which bonds. You can use the 2-year, 10-year, but in general, I mean the 2-year, to be fair, is looking like it wants to put in a high and begin a bit of a daily downtrend, right? So the Fed funds rate is what is, the interest rate and Fed funds rate is going to go up. Bond market's going to respond by, most likely, they're already in a downtrend. They will probably hang on the highs a little bit while some selling goes on for liquidity, while there is swaps going on and stuff like that. But daily could head up on above 4.73% on yield, which does mean that there's probably going to be, there was a higher high, lower low scenario. This could end up as a lower high consolidation, maybe a lower low, but at this point, the 2-year momentum disagrees with current price direction, because momentum was up off of the lower second standard deviation tap here. And, I could see this going into a consolidation and hanging on the highs is basically where I'm at for the 2-year. But you're going to see this across the market. The higher yielding bonds are going to be, right now, realistically, the highest yielding bonds at the moment are going to be the 1 month, 3 month, 6 month, and yearly. But you get into the more traditional, the traditional bonds of your 2-year, 5-year, 10-year, but you get the 2-year, 10 years, typically a good mix that you'll see a lot. And institutions, financial institutions, banking institutions that are handling money, whenever you're taking on more risk, you have to hedge on the other side with an asset, and treasury bonds are that asset. And in this case, you're probably not going to see too many places, unless they need to swap liquidity for yield. But you will often see that, in tough times like this, when the market is restricted, that you'll see yields drop. You'll see yield swapped rather for liquidity. So in this case, 2-year it's hanging on the highs on the weekly. It's in and around its highs from last year and higher from this year. I think this is just gonna keep it on its highs. Maybe it tries to spike a little bit higher. I doubt it though. I think if anything, it can make it back on the 2-year to like 5.28%. If it does make a higher high, maybe up to 5.5. But I'm not seeing the things that I would need to see for momentum. For instance, the monthly is flat but turned at 4.96. It did turn up coming into this month, but it's going to turn down next month, at the end of this month rather, in just a couple days here. And the quarterly is getting ready to drop off the face of the earth if this does close below 4.25% by the end of the quarter. I don't know if that's what's going to happen, but I do think last quarter of the year is when we see the 2-year turn on the quarterly to the downside in terms of quarterly momentum. I think it's topping out. I think there's only a few more hikes left, if there is any hikes after this. Whatever he's talking about is probably going to be reflected pretty shortly here in Bitcoin's price. As I'm watching it in the tab over here, 29,375. Bitcoin doesn't seem to care what he's saying at the moment. And I'm assuming the regular markets are not caring either. It's just get it out of the way. 10-year, 10-year does look very much like the others that we've looked at here. It does look like, it did not get a lower low in this case, but it could put in a daily lower high. Actually, it might avoid it. The daily lower high would be on any closes below 3.849%, and it is trading above there. Now, momentum is turned back to the upside too. It's trying to reverse off the lower first standard deviation. I suspect because of the hike that it might on the 10-year. Again, guys, I'm sorry about my voice. And the Bitcoin 60 seconds video is going to be tough to record later. But, it's the weekly it's hanging on its highs. You got nice spikes up. It has not made a higher high like the 2-year, but the weekly's turned on momentum at 3.94. It could head back into that area. The monthly is, trying to turn back up on any closes above 399, but it's not going to most likely make that by the end of the month. If it does, I'd be surprised, and it would only be an initial cross to the upside. And I do suspect that the quarterly is ready to turn. Maybe not this coming quarter, but the last quarter of the year. I suspect that the quarterly is going to be pressured down for the 10-year. It's getting very close. Much like Dixie, where the quarterly is turned, I think bonds are running 1 quarter behind that. Dixie has its initial cross to the downside on and when it crosses to the downside, because it's Stoke momentum is reading the downtrend. The last big area was going to be the 110 region, which is around the highs for the quarterly. So, like Dixie dumping off the map made sense when that we figured the quarterly is going to turn and provide pressure down. And you may remember this from the other day. I mentioned that Dixie regained the low side structure here, but that it was bearish from the basis band to the upper first standard deviation here. So when looking at Dixie, the basis band was, I think we talked about this on Friday, so it was already closed. And I made mention that, around that 101, I think it was, I want to say it was like 65, 69, something like that. Between there and the upper first standard deviation, which is now at 102.76, that's the bearish retest zone. It has gotten initial rejection off the basis at around 101.52, and it's headed back down to test this low side support. If it can hold on to it, I would try. I would look for it to try and set up a bounce to go take the next area at 102. Otherwise, I'd be looking for this thing to reject, come back down, and test the lower first standard deviation at 130 cents, and then see where it is from there. Let's look at the 12-hour on Dixie. I think the 12-hour is reversing. Yeah, the 12-hour showing pressure down, but the daily is pressure up on momentum. The 2-day is pressure up on momentum. The 3-day is still pressure down. 5-day is still pressure down. And the weekly is still pressure down. That might change this week. So Dixie might be able to recover and turn this into a deviation. Keep that in mind, because that, on the longer term time frames will mean that, there is a swap back into US dollars. So where that's probably going to affect most markets, whether it's, your traditional markets, crypto markets, and other currency markets, so your Forex markets. Keep that in mind. I know it looks grim, and we can say, like, oh, it's going to dump down and hit our 98.69 nice target, but that doesn't mean it's going to. It could turn into a deviation unless it starts to drop back below $100, basically. Starts to drop $100 again, then we're looking further down for longer. Now, from the daily, weekly perspective, though, if it does begin to turn back to the upside, it's likely to play into the deeper half here, 102, 103, maybe even 104, 105. I would not be looking for it to go make new highs, though. And that's where you're going to see a lot of, if we do see Dixie pushing back up, there's going to be a lot of bond liquidity swaps into US dollars. So that's where, it's swapping for liquidity as the bond market is, nearing its highs. And then we might get a switch over to parking money at the Fed again. We'll see. Right now, it's been a little bit more attractive to park money in yields. in the short-term time frame yields, like your 1 month, 3 month, 6 month, might be more attractive here shortly to, park with the Fed. And that's my stance on that. Let's go ahead and take a look at Bitcoin. Bitcoin in the lower term time frames. So that 15-minute was getting up there. Let's look at the structure here. So wicked right into our resistance area. And we are seeing Stoke headed to the downside here. Pivot for that's 29,322. So let's take a look at the hourly. Hourly's headed down. To cross it back up, 29,363. So painting a big old red candle down right now. Is Powell done speaking, or is he still talking? He's still talking. Great.
Merger proposal,
Let's hear
but I will say,
what he's got to say for a second.
Things have settled down for sure out there. Deposit flows have stabilized. Capital and liquidity remain strong. Aggregate bank lending was stable quarter over quarter and is up significantly year over year. Banking sector profits generally are coming in strong this quarter, and overall the banking system remains strong and resilient. Of course, we're still watching, the situation carefully and monitoring conditions in the banking sector. In terms of the the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that, that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions are tightening. That process is ongoing, and that will restrain economic growth. So I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is a restraining economic activity. So that's how I would look at it. And how is that informing your outlook for setting policy? So I think that is an expected result of tightening interest rate policy, is that bank credit conditions bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May? I just don't think we know that. I think we're
lending is not just tightening. Lending is,
and we're seeing strong.
So in addition to heavily restricting, lending, meaning, they're just not. They just don't have loans available. What that often means is you can still go get loans, but they're just going to be the loan product packages that banks are offering are very, very much they're very much restricted in that sense. And then you just have a lot of premium interest rates. So your premium on over the base rate is so much higher right now, which in effect restricts. And that's a lot of it's because they don't want to take the risks on because they are liquidity strapped. And they need that money to keep swapping for, in this case, higher yield in the treasury side and or backstopping the balance sheet with CFDs, which most of them just have very, very little backstop in CFDs. That is all left for some of the bigger players in New York that are headquartered in New York, but it depends on, a lot of it is a treasury-based. So for those of you in YouTube, I'm answering a question over here. A lot of that is going to be answering a question in the other chat over here with a group of guys over in a shop. You're going to have a lot of these banking institutions or lending institutions going to backstop with yield. So, and then they can swap yield. Yeah, then they swap their yield for liquidity when needed. Now, you can even swap well, it depends on what type of an institution you are. You can swap with the Fed. So if you have a low yield that you've been sitting on, the stuff that SVB Bank didn't didn't do, they didn't roll their treasuries, and they had the opportunity and they just didn't. So that's kind of where that is. Let's take a look at Bitcoin here on the monthly, because we are coming into a monthly close here. It's the wrong chart. So the monthly is a consolidation. So that's where we're at. As I had said in just about every stream lately, Monday's stream as well. Was it Monday's stream? What's today? Today's Wednesday, right? Yeah, so it was Monday. It was the Macro Monday stream. So the basis band is sitting at 28,500. As long as Bitcoin is closing above it, I don't really have any concerns for it to even come down and test the open here at 27,200. So that's not really a concern that I have until we see it break down below. Now, the reason why I'm saying closing, if it closes this monthly candle, which is closing in 5 days, if it closes below the basis, that is going to increase the chance that it's going to go test the 27,200 low side close open here, down to even the wick low here at 24,400. Or I'm sorry, my bad. That would be 24,750 on the wick low. Sorry, I was looking at where my my cursor was lining up. Because it's giving me the bottom half there, or the back end of the cursor, the arrow rather. But 24,750. Yeah, the guys in over in on YouTube are running a little bit behind you guys. So let's see. Hello, Jedi. How are you? All right. So the reason why I say that closing below the basis will likely, by the end of the month, would open up that possibility almost immediately down to 27,200 to the wick low even at 24,750, is because losing that basis on a monthly is going to, in my opinion and in my experience, send the initial outlook down to that area, especially the closing area at around 27,200. If it closes above the basis coming into next month, and then I would be more looking for the areas that we've talked about to the downside on the daily here, and that would be the 28,426 and the 28K weekly, more so than that area. So the big thing is, I mean, we've gone over this many times earlier this week. I'll go over some of it again today as well, but 28,400 to 600 is, a daily area. And then we've got the weekly at 28K. That is an area of importance on some of these medium-term timeframes as well when it comes to the Bollinger Bands. The 2-day is presenting a beautiful setup, by the way. But the low side, lower second standard deviation is now at 28,300. So that's beautiful. That would be as long as it closed above it, I'd be looking at that as a reversal off the lower second on a support area. And I'd be looking for things to head back up, regain the lower first. Of course, it has to lose the lower first. And right now it is bouncing off of that on the 2-day. And that is coming in at the low $29,000 region at 29,225 at the moment for the lower first standard deviation. If we did see a 2-day closure below here, it can wick below, but it's about the close. If we did see a close under here, then I would be looking for it to head down to the lower second, which is, at that 28,300 area. So it's in between that weekly and daily support and resistance area. So 28 to 28.4 to 6. That is, in my opinion, a very good setup. And yes, we would see BBWP expanding, but we're not seeing Bollinger Band expansion. We would be seeing price expansion within a set of contracting Bollinger Bands. And this is something that when I was looking at the way that Crown does his quant program, and because he's not using Bollinger Bands, often this kind of a signal where you're getting 2-day expansion, right? 8/4, and let's say it loses the lower first, so it ticks up to like 10 or 15 over, or 20/10 or whatever it is. That would show as a confirmed signal to the downside, along with Stoke being pointed down. But it would also be coming into a pair of, into a set, rather, not a pair, but it is a pair, upper and lower, but a set of contracting Bollinger Bands in this case by the lower second standard deviation, which is either going to be a reversal where it bounces off the supports there at 28 to 28.4 to 6, or it's going to be continuation, meaning that it's breaking down from that support. So that's where you would actually get the confirmed signal. Those are his wins that he shows in his quant program, or he doesn't show his quant program unless you purchase it, but in the on many of his videos, he shows the statistics, and he's got a spreadsheet for that. That's where the losses are often where you're getting the full signal with BBWP, volatility expansion, but it's coming into an area of support at a reversal point like the lower second or upper second standard deviations, and then it reverses from there. Those tend to be his losses, or they don't meet the criteria for time frame or whatever it might be for the bulls or the bears. And is likely to reverse and end up as a loss in many cases. But in this case, I don't know what his criteria would be for this one, as I don't have that particular. I'm not a member of any of those programs. I have the indicators that are quite a bit older, as I've integrated them into my setup. But in this case, I would be looking for some sort of a reversal in that area. And if it did lose it, I'd look for continuation. We'd be actually looking much further down if we got expansion on the 2-day to the downside. I would be looking for, of course, the supports on the way down, but I would be looking for pretty heavy expansion and a longer form accumulation before trying up, to some of those deeper areas. Now, the basis for the 3-day is at 28.8, and that area has been tested. So I would say, this is going to close today above the 3-day basis. Things are looking pretty good, and likely, from the angle of it right now, from the 3-day, unless it just slices through and gets under there, I would be looking for this to bounce off of this area personally, just based on the way that the bands look. But if it does lose that area, that opens up the lower first, and that's all the way down at, 26,900. It's 27K basically. And that is going to close today. 5-day is starting to look a little bit better. It has closed. We did have a close open that is painting the picture, of, this Tuesday open in this case was, the last stream I was telling you that the basis was pointed down because it was still reacting to this downtrend and mean reversion back to support and reversal off the lower second standard deviation of the Bollinger Bands. In this case, the basis has started to point back up. I'd call this flattening out, and it's at 28,470. So, right there again in that key area of support, and then the weekly is at 28,500. So that is for the basis bands. And then we do have nice compression on the weekly that is going to be setting up for a much larger move over time here. But this is I do suspect this is going to take time to develop. I don't think we're going to see this happen too quickly, but the weekly is starting to present quite the setup. Now, of course, being in the strong half of the bands is a good thing. If it does lose the basis there at 28.5, the lower first is sitting at 27,000. Again, we have some confluence on other time frames for this as well. Lower second is at the lows, so this could potentially even head there and still be okay as long as it does not lose the lower second standard deviation around 25,630. And if it did, that would be bad for the bulls. Now, I still think that from the look of the Bollinger Bands, Bitcoin could run all the way down to the lower third at 24,200 or so, and it's still fine. And also, that's this high over here on the weekly before the breakout. That would swing the low. I would want to see it close back in, even if it closed below to get everybody really bearish. It could pop back up. There'd be a bullish divergence, I imagine, on the other side of that. And then we kind of go from there. Just because of the slope of the bands and the way that they are contracting right now, if we did see that from its current position, because this will update at the end of the week, I would still be looking at that as a potential reversal zone. And then we come back to it after any kind of a bounce and see what we might be looking at. Now, the upper first standard deviation is at 30,000. The upper second is at the highs at 31,400 rather, I'm sorry. Back above there, this is going to begin expansion to the upside. I'm not looking at, quite honestly, unless Bitcoin bounces really hard, throughout today, tomorrow, into Friday, I'm not necessarily looking for this to beat out like an upper second standard deviation on the weekly at 31,400 or so. But it's not out of the question. If Bitcoin did bounce aggressively from where it is or come down and test the basis on the weekly at 28.5 or under, and then bounce and regain that $30,000 especially, then it would open up the door by the weekend to look for that. If it does lose the basis, that opens up the door for the lower first by the weekend, though, and that's at $27,000. So realistically, keep an eye on 28.5. If it can regain the current daily area, then it's going to start looking a little bit more encouraging for, as we head into the weekend, that things might be able to move in a direction that it will be a little bit more clearer for the longer term, is what I'm trying to say here. Sorry. So yeah, that's my take on Bitcoin. Is Jay Powell still talking? No, good. Bye, Jay Powell. All right, so let's take a look at some fun stuff. We have some quant data here. Did want to take a look at OI. And let's see here. Let's just come in real close here. And we can see that OI is at about 9.6 billion. It is coming down as Bitcoin's price is rising, and OI is above the 50 moving average here, so it has been bouncing off of that area as well. I would like to call your attention to this chart actually, and that is that for open interest here, which is in purple, as it relates to price, when open interest rises, generally price is going to rise with it. There is often times where you will see that OI is rising, and it's still rising as things are reversing, or it's still falling as things are reversing in one direction or another. But in general, throughout the history of Bitcoin, at least going back to 2020 for crypto quant, you can see that OI plays pretty well with price. So in general, with OI moving above and holding that moving average, Bitcoin has been basically rising with OI. Now, you often hear like, well, it needs a flush out. Well, a flush out in OI is typically going to mean lower prices in most cases. So in this case, hanging out above the 50 SMA is going to be preferable for the bulls. If we do see it drop that 50 SMA, we are likely looking at it hanging out in some of those areas that we spoke about around 27,000 to 27,500 or so. That would be my take on where OI is in relation to the moving average here. And when you combine that with funding rates, funding is still positive, but it is pushing down a bit. So yeah, it's still positive actually. When funding goes negative and OI is going up, that's where you're looking at. That's where you're looking at likely shorts entering pretty heavy in an area. So that's kind of how you can read that. If OI is going down, you're rarely going to see an inversion in funding. So yeah, OI is open interest. So you can think about it's like the total. It's the derivative contracts open interest. And in this case, we're looking at the total that is measured by CryptoQuant, which I believe is where Coinalyze is getting some of their data. So there is one other thing that I wanted to look at in here, and now I cannot remember what it is. Oh, I wanted to show you guys we're going to look at, no. Is it market indicator? Yes, SOPR ratio between short-term and long-term holders. What did I want to see here, though? Now, I might have this in the chat over here, so give me just a second. Oh, you guys are talking a lot in here. I lost my place. We're looking for... okay, yeah, what I'm looking for is the realized price. And that is not in this area. So we want to see... Excuse me while I mess around here. Yeah, we're not going to see that over here. Where is the realized price? I just got back in here and started to look, so we're just going to have to maybe skip that for a moment. There it is. Okay, so this is your coin age average price. And in this case, I have the 1 day to 1 week, the 1 week to 1 month, 1 month to 3 month, 3 month to 6 month on this chart. So what I'm looking for here is confluence with our charts that we just looked at. And that would be, our regular price action technical analysis. I'm looking for some confluent areas that line up with the areas that we just talked about. So we have $27,000 comes in at the lower second and lower first in many cases for below the basis in many of these time frames that we've looked at on the higher term time frames up to that weekly. We've got 27.5. We've got 28 to 28, 4 to 6. We have overhead resistance at 30K, and then we have that resistance at 30,000 or 31 to 31.2 that I've called out in the videos. So above we can see this purple line, the brighter purple, this 1 week to 1 month here is sitting at 30,500, which is the in and around the upper first standard deviation on the daily. So average price bought was around that 30,500. And we can see that reflected, in the Bollinger Bands. That's the upper first at 30,595. And the 1 month, 1 week to 1 month age is 30,482. Now the 1 day is at 29,660, and that is going to be the purple that is closest to the white line here. So when looking at this, we can see the overhead resistance where many would want to reposition or exit if it were to rise back and into those areas. And underneath, we can see the longer term. In pink here is the 1 month to 3 month, which is closest to price action. That is going to be 27,400. And then we've got the 3 month to 6 month at 26,151. So they often line up with key support and resistance areas, right? And we can take a look at this 1 month to 3 month, and we know that that is our supports down here on the daily at this area here at 27.5 to 27,250. So we do have confluence with quarterly average buying price, basically. And that is something that I do pay attention to. I don't do a lot of quant analysis because I don't find it useful for anything other than confluence. And a little bit of open interest data is sometimes helpful to kind of pick out what's going on within the range that Bitcoin was operating. For instance, OI kept creeping up and then came down, and it was higher here than in many cases it was down here, as it should be. But then when it started to drop below the levels that we saw over here and then spike and not regain any of the highs up here, well, that means that we're probably going to head down. So that is the open interest being at the same level as it was when the highs were put in at 30,500 over here on the first drive up to this range. We, of course, went higher than that in open interest, spiked the overhead resistance at 31.8. When we came back down, open interest spiked back to these high areas, but never broke through to the upside, which means that it's likely going to get washed out to the downside. And that's what happened here. That is something that I have been pointing out on Twitter a little bit when I do post the open interest charts. And, and when OI is rising into resistance like it is today, and funding is headed down, I would wait to see if funding goes negative before calling this cooked for the bears. It would have to regain that lower first at 29.6. Now, I do want to get into questions. Does anybody have any questions over there in YouTube land? First, as you guys do have to catch up, I already see you guys over here in the other chat. I will answer some of those questions in a little bit for you. Let's let YouTube catch up here. Let's just check on Coinalyze real quick. Yeah, so Coinalyze showing the same, about 10 bill on the OI. Let's go back and actually look at exchange OI here. Or not, because I already lost it. Holy crap. Should be like one of the more popular things to look at. So I would think if I just close all this down, get my bearings on this giant list again. I do want to see if there is Yeah, apparently I have lost OI. Okay, it's under derivatives. So this is putting OI at around 9.5 billion. They might be right in line with each other. Nope. Hourly. Let's just update this real quick. We've got 9.82 billion. It might not update on CryptoQuant. Yeah, it's CryptoQuant. Might not update there until the hourly closes. So I do know that Coinalyze will update on the lower term timeframes. So, but my particular plan with CryptoQuant is a daily. So it's probably only going to update that hourly within the day once the hour closes. Is there anything that you guys over in YouTube wanted me to check out for you that we can catch up on, or are you guys good on that? No questions? I see quite a few of you guys in here in YouTube, and I don't see a lot of chatting going on. And I am sending my stream over separately to these guys over here at the shop. So they're not logged in on YouTube. So go ahead and chat in there if you're hanging out over there on YouTube. All good? Let's go ahead and we can look at some lower term time frame stuff here. The 12-hour, the 12 hour is going to be kind of interesting, as the 12-hour did turn down on Stoke, but 29,370 would turn this back up initially. We have seen the 12-hour regain the lower second, and the lower first, if it can regain this area, of course, this would be the basis of the 4-hour here. Yeah, that's still the 4-hour. So regaining the basis of the 4-hour at 29,377 to 29,4, where the lower first is coming in here on the 12-hour, would look good for Bitcoin to test up to the areas that I talked about, and that would be the low side structure around 29.8 on the daily. That would be above, of course, the resistance area, so it still needs to get through the 29 4 to 5 area, obviously that horizontal support and resistance, but this would give confluence to what I talked about in the Bitcoin in 60 seconds videos, and what I've talked about if the range lows wicks get reclaimed. It's 29.8 on the daily close, and that is lining up with, a reclaim of this basis band on the 4-hour and lower first on the 12-hour would give us, that 29.8 retest, and that's a test of the closing structure on the daily and the 12-hour here around 29,800. Slightly under there, 29,770. I believe that's 29.8. What's this one? That was the wick. Yeah, 29. Yeah, we can just call it 29.8. It's easier that way. And then if it can reclaim that, I'm still bearish on the 12-hour below that $30,000, which is the basis band on the daily. So, and that would also be the upper second standard deviation of the 4-hour. And coming off of a downtrend, it's a likely area for it to reject if it did start to reclaim this on the 4-hour. If it can reclaim the basis to the upper first here at 29,700 to 800, if it was to push up to the upper second, it's likely to swing that area and then probably pull back, and that's the daily basis band area. So be aware of that. We can even change this to be the daily. The daily basis band is slightly above there. I think it's like 25, 30 bucks above there. No, it's actually almost 50 to 60 bucks above. It's sitting at 30,100, but 30K is going to be, the area likely that it sticks around, which is, just above that upper second standard deviation. So if we do see the 4 hour starting to gain ground in relation to the 12-hour, close above the basis here on this next 4 hour candle, and 12-hour would look good for it to test further up. Otherwise, just be aware of the failure points there. Let's see. And to the downside, I mean, trading back below the lower first on the 4 hour, which is the lower second, below the lower second on the daily. That's your 29K. That's where we're looking at a swing of the lows, where the lower second standard deviation is coming in. I wouldn't rule that out either if it does pull back from here. If it breaks down from there, then we're looking at 28, 4 to 6. Let's take a look. So Roka says, all good. I stepped out for 2 seconds. What is this hammer doji? I don't know which. Are you talking about Bitcoin and what time frame? This is just a doji on the 4 hour, for instance. All good. Just flipped my XRP short into a long and figured out your take profits, says JR. Interesting. Cool. I haven't actually looked at XRP in a little while, since Monday, in terms of evaluating it a little bit more fully. But would you look at that? It did bounce exactly off our low line here. Interesting. Look at that. I don't know why you're so surprised, Mr. Jedi. It's FOMC day. I don't know what you're expecting. Volatility is the name of the game in the lower term timeframes today. We'll see direction likely at close today and through tomorrow and the next couple of days. Probably by Friday, we'll have some pretty concrete direction if we haven't already seen it. Ooh, fun. Yeah, it literally just came down to our support consolidation area. So looks like it'll retrace. Retrace in what direction, sir? Good momentum? You mean bounce or retrace further? Are you talking about XRP, JR? This looks like a decent bounce. The 4 hour, it's got to gain that upper first, which is around this last low. It's actually got to gain the upper first and second, I would say, on the 4 hour here. Start really pushing on through. This little low to high structure. So you want to see this thing gain. Yeah, there's 2 lows put in here. And it's the high structure over here. So you're looking at a confluent area with a high and 2 lows in it at around 73. So 73.3 cents, 73.32 to around that wick high at 75.18 to start getting expansion back up. Test this this area at the above 75 cents, around 80 cents at that high by the daily upper first. This is pretty much lining up the way that I had spoken about prior, which is, as long as it's holding this 67 cent to, that basis down there, which is now pretty much in this support area that I've drawn out, then I would be looking for it to be generally strong, and probably chop around the highs here and maybe even get some continuation further up. I would not be looking for like any kind of a move further down outside of this range until you see it below the daily basis band, especially because it's going to be within range, I suspect, in the next day or two. So, and if it does head back above the upper first to the upper second, just know this is heavily expanded still on the daily, as denoted by your levels indicator. The upper second is in a rejection zone right now because it is coming off of high volatility expansion. If it regained the upper first and spiked into the upper second, it's likely that it could even swing higher, but it's more likely than not, if we don't see compression first, that would be a rejective area. So around 93 to the upper third at like $1.06. It's more likely than not to be a rejection if it were to happen before compression of the Bollinger Bands, if that makes sense. Does that make sense? I hope that makes sense. Excuse me, I've got to take some pain medicine. For those that don't know, I have really bad muscle issues that only recently found out was genetic muscular dystrophy. So, and I was doing some yard work the past few days. So sometimes when you hear my voice not doing well, it's not just like allergies and stuff. It actually is because my muscles aren't acting the way that they should, including my vocal cords. So do apologize. Has gotten a little bit better as I've been speaking here, but takes a little while to warm up. For now, max target to the upper first, where the supply zone is in the middle time-wise of the range, 80 to 82 cents. Well, that's the area that I was just calling out, that high, which, would be, what you're saying is pretty much confluent with what your outlook is confluent with what I was seeing, which is around this high here at around 80 cents or so. Now, to the actual highs. And that's pretty confluent with what I'm looking at. It's got to reverse this downtrend on the 4-hour and then try for further upside. So, yep. Oh, Cheryl. Yeah, no, it's no worries. It's a genetic thing. For many years, I was having problems, and I was like, they're like, oh, no, you're fine, this and that. I still have to go in and do, like, the actual biopsies and stuff, but pretty much figured out that it is some sort of a muscular some sort of a dystrophy in the muscular dystrophy family. But if I do a lot of like really physical exercise, I'm down for the count pretty much for couple days in many cases. So, but yeah, looks good on that. Anybody want to see ETH? I'm sure you do, for some of you at least. Let's go ahead and take a look at ETH real quick. Hey, guess what? ETH came down to the zone that I was talking about on the 4-hour at least. Let's look at the daily. Yes, it does not want to lose this area. Specifically, no closes below 1821 to 1816. You start seeing that ETH is going to be headed down quite a bit further. To test like 1800 and under, I suspect. 1800 would be kind of like the bounce of last resort for this particular consolidation, and then it's likely to head much further down. From the look of this 3-candle structure, it could paint a swing fail today. It's got to close above. That doesn't mean that it's going to be a reversal, but it could paint a swing fail today on any closures above 1868.14. So keep that in mind. Momentum-wise, 1888 would be this would turn stoked back up on the daily, but that's not necessarily It's more about where the close open comes in, especially if this does paint a swing fail pattern. Now, do not, and I'm going to get into swing fails specifically. I'm going to have to do it Friday because today was FOMC day, of course. So, but I'm going to do a live stream on Friday, and we're going to specifically, I'll do my normal analysis, but we're going to specifically be talking about swing fail patterns. Now, what I want to call out here is, let's get rid of the Landy bands and just take a look at this real quick. This, in my opinion, will be read as a low if it closes above this 3-candle structure. So you got your bear candle down, and then you've got your doji in the middle, and then close back above that doji wick high. In many cases, you'll see a lot of indicators will call this a low. It technically is a low, but it is a swing fail low. It is not a reversal low. Now, the reversal I wouldn't be taking until it's back above this this order block area and the open of the 3-candle structure in this case. So, which is currently a 3-candle structure. It's probably going to become a 4 or 5 candle structure, which then becomes a swing fail area if it can regain this 1888. Go figure. That's the momentum pivot. So that means that this low side where these wicks are would become a swing fail pattern area. So you'd have a swing fail on the 3-candle, and then you have the swing fail pattern area to the low once this open is taken out here. Now, that does not, for today's candle, if it can close above the wick high here of yesterday's candle at 1868, that's where I would want to watch Stoke, right? Because that's going to change. Right now, Stoke momentum would cross back to the upside here on any close above the open of this current 3-candle structure. So this bear candle open is at 1888. That's going to update. I imagine it's probably going to be somewhere around, like 1866. That would be an initial cross to the upside if it can close above there, and then you need to see the subsequent candle close after that to get the K and the D fully crossed to the upside. And then we can start looking at this area, especially if it closes above that 1888 as a reversal structure to go test higher. In this case, I would be looking somewhere around the upper first standard deviation to this 1940 resistance. It's 1935 to 1940, basically. That's what I would be looking for, which still doesn't get it out of the out of the woods here until it's back above its most recent high, but it would give it the chance to consolidate and then possibly break. We watch for the next break of the high or low. All right, so, let's read here. Sol, I can take a look at Sol in just a moment. I see a conversation about ETH and probably speaking about the .eth addresses, the .eth address folks. I see. We can take a look at Sol. I'm going to warn you, Sol is probably, for the longer term, probably decent for trades. I was looking at Sol a little bit more in depth recently. And when looking at the monthly for Sol, I feel as though Sol is going to... I don't think it's ever going to become what it once was. Obviously, this was a project that was very heavily backed by FTX. So, but when I was looking a little bit more into Sol, I don't think this is ever going to transition back into new high territory. I think it'll be decent to trade, though, for a while. I know that there's longer charts, yeah, Binance. Now, the argument would be that on the monthly, all it's got to do is regain the $43, and then it can basically run to around 95 and try for the highs again. I just, there's going to be new hot coins that I think do what Sol does. That's besides the point, though. Let's look at Sol in terms of its actual daily and some possible trades. This is looking like it's going to be a reversal on the daily. Oh, look, this probably bodes well for Bitcoin if, ETH and alts start to reverse up a little bit. This would be a swing fail pattern right here. If it can close above this open, this would be a confirmed swing fail, and it would be above the order block. Also regaining the basis on the daily. So that would be on any close above the open of the bear candle at 24.76. Then I would be looking for things to add up to around 26.50 at the upper first standard deviation on the daily. Of course, back below 23, back below today's open at 23.30, 23.28, depending on your chart. You can give it down to the lower first, but I would be very, very cautious, and that's at 22.32. So you're really looking at the open at around 23.30 to 22.30 to hold, and if that didn't, I'd be looking for it to go to $20. 4 hour looks pretty good, pushing that upper second standard deviation. I imagine there's probably going to be a pullback here. There is a meme trend line that it's butting up against right now. It's got 30 seconds to close up here. Stoke looks good though. 23.32. There you go. It's the lows for this. Now it did come off of the 23.32 is going to be the close. Yeah, so the momentum pivots all the way at the lows right now. What I would be looking for is for this to, this is the daily representation of the Bollinger Bands over on the right here in comparison to the 4 hour now. I'd be looking for it to come back to the upper first standard deviation and daily basis to the basis at the 4 hour as the big area for it to hold if it does pull back here in the next 4 hour candle or so. But right now it looks pretty strong and it's got momentum to the upside. So I would be looking at around that daily 26.50 area at the upper first. And if it's going to push past there, it could even swing up to the $27 area. Basically, you take it at its local high here. It's got to try to hit this area here on 25 to 26. Then I'd be looking to 26.50, which is this low side structure here, 26.30 to 26.50. And then you can look up to around $27 at this high structure on the 4 hour. I would just look left, right? Like right now, it's got a little ways to go to get up to this area here. At around the $26 area, there's a nice little 4 hour order block there as well from where the top was put in that it tried to hold after losing it, and it has acted as resistance over here. So you got that little 4 hour order block. There's also a daily order block just below here that it is above as well. So you can mark those areas as areas of interest. How that's going to help you is going to depend on your trading style and preferences, but basically it's got to regain this high here and this low over here. So you got your confluent area at 26.07. That's the area that I'd be looking at. If it does break through there, I'd be looking up to, I'd be looking up to $26.50 to $27. And then a little bit above at 27 to 27.50 at that high. To the downside, again, like I said, you don't want to see it really closing back below. Preferably, you want to see it above the upper first standard deviation at 24.70 to the daily basis at 24.40. So about a 30 cent cushion there to the downside. At worst, it can come all the way back to 23.90 at the 4-hour basis before end of day. Otherwise, I'd be looking for this to continue. You want to see it continue in the strong half of the bands on the 4-hour. And if it does drop that lower first, like let's say it turns into a big old doji candle on the daily, the lower first being at around 23.12, that's dangerous, but it still could hold there. I'd be very careful though. You'd be looking for an accumulation pattern that then gets expansion to the upside. Otherwise, you want to see it consolidating in the strong half of the bands. You want the lower first to curl up and use that lower first as an area of support that's at a support, not at your low. So that is my outlook on SOL there. Let me read the chat real quick, and I will let's read the chat real quick and see what you guys are talking about in there and see if I can catch up. All right, so 10-second chart, this Bitcoin stuff going on here. Oh, let me drop a few things on my desk here. All right, so put your funds on it to transfer between accounts. Really? Who? Okay. You like to just trade it? Okay, good. There's really low fee stuff that you can use for transfers as well. Particularly Litecoin is really cheap and fast. I've already had that conversation with you in particular, though. Doge is fast, runs on Litecoin. XRP is fast, kind of. Litecoin, in my opinion, is the easiest and fastest, and it's supported in just about every wallet that you can think of. In some cases, there's some wallets that still don't support XRP transfers. Depending on, most of the major wallets will for Doge and XRP, but Litecoin kind of universal. Cheryl says, thanks. SNX for some trading opportunities. I'll take a look at that in just a second. Like trading the daily, so if SOL holds 23.90. Yep. Bitcoin is making a push for the overhead resistance here. And it's going to be interesting to see if it can regain that. I do suspect that the daily lower first standard deviation is going to be around this resistance area at the end of today. So if it can regain this by tomorrow and regain that lower first, I would be looking. The big area for you guys to watch on Bitcoin is going to be $29,800 to $30,000. Above there, I would be looking for Bitcoin to head up and test around the weekly 30,300 to 400. And if it regains that, the bears are trapped. It's probably going to run it back to the top side of the range. But, well, I mean, this is a 10-second chart, so I would still be very cautious. Bears are in control, to be quite honest, right now. I'm not seeing, the bulls have to regain the lows first, 29.45. If they can regain the actual range lows, and specifically 29,800, then I would look for, potential further upside. Let it chop around the highs kind of thing. All right, have a good one, Jedi. Yeah, so I could take a look at SNX for you real quick, and then I think I'm going to wrap it up here. Unless anybody's got any questions here. Any preferred? We're just going to have to go with Binance. I imagine they have the best liquidity, so their chart won't look like garbage. SNX in the daily, I'll be honest with you, this pattern looks fine. It will become higher lows on a close if it can close here or higher. This is much like Solana. This looks as though if it closes like this, it looks like a reversal structure on the daily. You've got a swing fail to the downside, 3-candle structure as well. I would look for it to test back up to 327, which is the upper second standard deviation, if it can close above the upper first today by end of day. So above 291, that would put in a swing fail, reversal structure. Preferably, you want to see it above the wick high too, which is going to be at 294 on the daily. It's trading slightly above there right now. I would look for this to push up to $3 here at the close open structure on the highs, to the upper second standard deviation around its wick highs at like 325 to 330. If it can break out above there, it might have some more heat on it, maybe up to the deeper, 340, 350 area. But I would be cautious as it is still in a mean revert look here. It's volatile, but I don't think that it could play around the highs. I think it needs to go into a bit of a consolidation here soon, and any closures below 299 will turn Stoke to the downside. So I would be aware that I don't think it's ready to take off. It does look as though it wants to try to put in a 3-candle structure that goes and tests higher. But I do think that it's going to end up going sideways for a little bit. I could be wrong. I mean, it is a shit coin. So it could just blast off to the moon and defy all of the typical volatility metrics. But in this case, Bollinger Bands are pretty spread out. I would be looking for this to try for $3 and 330 to, we'll give it to the upper third because it is a shit coin. If it can regain $3 here at the highs, and of course close here or higher about 293, I'd be looking for that 7-cent rise to $3 and then 330 to 360, and then come back to it. If it does lose today's open, it's probably headed back to 250 to 255, and possibly even down to 220 here at the lower first. There is confluence around this high side structure here. It does look as though it's tried to play pretty technically on the highs. So we've got 240, and let's see, what else do we have for supports here? So it's already tapped on this guy over here at 250. So if it loses this area, I'd take it, 250 to 255. I would take it down to about 234 to the lower first here at around 220. So 220 to 240 would be my downside if it breaks below 250. Then you've got 220 to 240 is kind of the zone that I think it would probably head to. Just be aware, because if it dropped that, it's going under $2. But for right now, target would be $3 to the upside, to if it can break above that, to 330 to 360. To the downside, eyes on any kind of price action below 255, which would be bad because of where it's trading right now on the daily. So I know that there's a few others that actually have watched this particular coin that I know as well. So you are not the only one watching this one, Cheryl. But yeah, for right now, it looks pretty strong. I'm assuming that market-wide we're seeing a good push. Yeah, and we are. I mean, Bitcoin is still just testing the low side of the consolidation, so nothing too crazy and nothing out of the ordinary, nothing that we haven't talked about since breaking down here as well. So, and then, in the Bitcoin in 60 seconds videos, I noticed they're not getting really pushed by the YouTube algorithm. So even people within that are subscribed are not seeing it, but that's unfortunate. But it is something I know that is happening. The algorithm just really isn't pushing some of those videos, but just about everything that I'm talking about in those videos in terms of targets to the upside and downside are tracking pretty darn well. And I do think that if we do see the lower first to that $29,800 to $30,000 basis regained, this will not only be a deviation, but likely lead to a run to the top side of the range, and that's kind of where I'm going to leave things today. If we do see the low side structure dropped again, we're looking for that 28,000 at the weekly and 28.4 to 6. That's the big area to watch to the downside, and then the big area to watch right now to the upside is basically the lows to 30,000. So I am gonna hop off of here. I do appreciate everybody hanging out. I'm just having a really tough time with my voice today, so I am going to rest up a bit, and I will be back later with a Bitcoin in 60 seconds video, of course, as always. And if you do have any questions, feel free to send me a DM on x.com, because it's no longer Twitter. For those of you using mobile, I don't think you guys can see the community feature there. So if you do go to the desktop version of Twitter or x.com, I would be, if you look on the left, there is a communities tab, and there is a Bitcoin. There is a Landy's Crypto Corner community. You can search in there, and there's a few members in there. It's hard to get to, so it's hard to grow because the mobile app doesn't show the communities tab for some reason unless you're already in the community. So just keep that in mind. They need to fix a few things there, but you can always message me through there, message me on YouTube, and I'm still getting emails from some of you guys. So again, I will try to answer those questions either on a live or I'll just directly email you back. Other than that, I do appreciate you guys. You have a wonderful morning, afternoon, and evening, no matter where you're in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out.